Hello everyone. Today in this video we are going to discuss about cost object controlling. So in previous video we discussed on product cost controlling. So how we are going to control the product cost. So in this video we are going to learn something about cost object, how we are going to control the cost objects. So in this video we are going to learn configure cost object controlling by period and by order, manage orders from preliminary costing through simultaneous costing, understand work in progress calculations, understand variance calculations, understand the settlement of cost objects, manage sales order related production scenarios, explain simultaneous costing and stock valuation, understand results analysis calculations, understand the settlement of sales orders. So in this chapter, in this video, we will explain the purpose and design of cost object controlling by discussing the different cost objects available, the basic configuration of each, and the costing phases from preliminary costing through final costing. Cost object controlling is one of the most complex components in controlling. As a CO consultant, we may be asked to decide which of the three cost objects to implement. We need a solid understanding of how these three cost objects differ from both a business process view and from a technical view. The calculation of plan and actual or simultaneous values are a few of the tasks performed in the scope of cost object controlling, and you will need to be able to configure these calculations and explain them to your customers. You may also need to explain how SAP S4 HANA calculates values such as work in progress and the different variance categories, as well as handle more complex results analysis steps for sales order controlling. So these are the few things which we need to explain in this video. So we need to have a solid understanding of the cost objects both from the business perspective and also from technical perspective. The calculation of actual and plan values are a few of the tasks performed in the scope of cost object controlling. This component of CO builds on the knowledge you have gained regarding product cost planning in previous video, as these two processes are tightly integrated in valuing the cost objects used for cost object controlling. In addition to integration with CO, as a CO consultant, we also need a foundation in the integration with logistics in the areas of production planning and material requirements planning and sales and distribution. So in this video what we are going to see cost object controlling by period and cost object controlling by order, sales order related controlling, work in progress, means like work in process, variance categories, settlement. So cost object controlling is a subset of product costing which includes product cost planning as a prerequisite. In previous videos, we reviewed the requirements of creating material cost estimates, the quantity structure, and the resource prices needed to plan a cost at a point in time. In cost object controlling, our task is to measure the cost of producing goods and services against material cost estimates, usually the standard cost estimate created during product cost planning. You will accomplish this task by using a cost object. Depending on the CO requirements, you can use any of the following objects as the cost object. It might be sales orders, production orders, process orders, project systems, and product cost collectors. Functions supported by the cost object controlling include the following: valuation of material movements, allocation of overhead cost from cost centers and business processes, calculating work in process, calculating variances, settlement to FICO with details for valuation if results analysis is in scope. In the following sections, we will review three cost object controlling scenarios and walk through examples of the configuration steps involved in deploying each scenario. Methods and valuation phases. In SAP S4 HANA, three scenarios are available for use of cost objects controlling by period, controlling by order, controlling by sales order item. Let us begin with a high-level comparison of these three scenarios or controlling methods as listed in the below table. So, SAP scenario cost object, manufacturing scenario, periodic work in process, periodic variance, periodic results analysis, work in process method. So, by period, by order and by sales order, the cost object will be product cost collector, production order and sales document, sales order item. SDI is sales order item. By period, manufacturing is repetitive. By order, manufacturing scenario will be make to stock, and by sales order, the manufacturing scenario will be make to order. So, WIP and variance, periodic WIP or variance, that is for order. By sales order, there is no work in process or there is no variance. Work in process and variance are same for period and order. Periodic results analysis, this applies only for sales order, and work in process method, it will be at a target by period, at actual for order, and it is not applicable for sales order. So there is a tip. As we can see, many factors are involved in the decision of which scenario to deploy. All shop floor processes and accounting requirements require a thorough review during the project blueprinting phase to determine the best choice. Regardless of the scenario you choose, each cost object used will require similar valuation phases, each with its own calculation method and each tightly integrated with logistics processes. Preliminary costing. This phase calculates the preliminary or planned costs by applying the strategy of a preliminary costing variant to the quantity structure of the cost object. An example of this method could be valuating the quantity of the raw material required on a production order according to the standard price of the raw material. In the information system, you can measure actual costs against these values. So in addition to that, there is simultaneous costing, periodic costing and final costing. In simultaneous costing phase, goods are being issued and received in the warehouse and labor times are being confirmed by the shop floor, each with reference to the cost object. These actual quantities are reported by logistic workers and are evaluated on the cost object by the actual costing variant in real time. Periodic costing. In this phase, additional costs not already included can be calculated and activity prices can be reevaluated from a planned price to an actual price. So in final costing, This phase calculates the value of any unfinished inventory, work in process and variances between the actual cost and a standard cost estimate, as well as in case of cost objects with revenue. Results analysis, often referred to as RA. The last step of final costing is to post these calculations to FICO through settlement. So these are all the different types of costings. Preliminary costing, in that they will do the plan costs by applying the preliminary costing variant to the quantity structure. So for this example is evaluating the quantity of the raw material required on a production order according to the standard price of a raw material. And in simultaneous costing, goods are we will issue the goods and received from the warehouse, and labor times are being confirmed by the shop floor, each with reference to the cost object. These actual quantities are reported by logistic workers and are evaluated on the cost object by the actual costing variant in real time. So in periodic costing, additional cost not already included can be calculated and activity prices can be reevaluated from a planned price to an actual price. So in final costing, the value of any unfinished inventory, work in process, and variances between the actual cost and a standard cost estimate, as well as in the case of cost objects with revenue. Results analysis, everything will be evaluated. The last step of final costing is to post these calculations to FICO through settlement. So these are all the few steps involved in this costing process. We have a small note here. The periodic and final costing phases are sometimes grouped together as final costing or just as period end processing. You can align these CO valuation phases to the life cycle of a production order or process order in logistics as follows. So the first, an order is created, scheduled and released in logistics, and preliminary costing occurs in CO. So the materials are withdrawn, confirmations posted, and goods receipt posted in logistics. Simultaneous costing occurs in CO. So the order status is maintained ultimately to TECO, technically complete, in logistics. Final costing takes place in CO. So product cost controlling by period. This scenario is most often deployed in a repetitive manufacturing environment. Repetitive manufacturing involves the rapid manufacturing of goods, often in an automated factory, for example, automobiles and electronic goods. An assembly line is run until all available raw materials are consumed, and then the line switches to another product. In many cases, a planned production order is used on the factory floor. A planned order is not considered to be a real order and cannot collect costs. A planned order presents an opportunity for costing, famously called a decoupling scenario in SAP S/4HANA. This decoupling is quite simple. The PP order type has an indicator to decouple the order from costing. To accommodate this PP requirement, SAP S/4HANA offers standard order types for CO, order type RM01 and order type YBMR. These order types create a product cost collector that will be linked to the PP orders. All quantities are reported on the PP order, but all valuation occurs on the CO, product cost collector. In this section, we will walk through the key components to configure for cost object controlling by period. So cost object controlling by period. So SAP S/4HANA offers standard order types for CO. Order types RM01. Order type for controlling by period. The product cost collector master record is created by selecting an appropriate order type. All the control functions of the order type are then transferred to the product cost collector being created. The order type is created and maintained in the configuration menu. The order type for CO is a client level object created as category 05 product cost collector as shown in figure 6.1. All control parameters are contained in the order type including number range interval, settlement profile, planning profile, commitment management. So number range interval controls the number assigned to the product cost collector at creation. Settlement profile controls settlement routine of the product cost collector. Planning profile controls how overall values are planned on the product cost collector. Commitment management, if selected, the product cost collector will be updated with commitments. So we have a small note here. Commitments are first activated at the controlling area level. As discussed earlier, once active, you will be able to see the open purchase documents for the cost object. So if we see the figure as discussed, the profiles mentioned earlier are created independent of the order type and can be assigned to many order types. The same thing we have seen in product cost controlling. We will review various profiles in later sections of this chapter. So here order type, order category, number range interval, settlement profile, planning profile, and commitment management. Cost accounting relevant defaults. Default values by plant. It's a transaction OKZ3. So default values by plant. If it is plant 0001 RM01, RM01 and 10 YBMR. As order types are defined at SAP S/4HANA client level, SAP S/4HANA provides an additional level of detail for cost accounting default values to the order. As shown in this figure, these defaults are assigned at the plant level. Now, as shown in this figure, each plant can define its own rules for costing by order type, including default rule determines how the settlement distribution rule is structured. The default rules are predefined by SAP S/4HANA and cannot be changed. For product cost collectors, this setting must be STR, periodic settlement. RA key, the results analysis key, controls the WIP process at period end. The preliminary or version costing, the preliminary costing variant controls the planned valuation of the product cost collector. Simultaneous costing, the simultaneous costing variant controls the actual valuation of the product cost collector. All the default values will transfer to the product cost collector at creation. So costing variant for controlling by period. So the costing variant preliminary costing for the production. So the costing variant contains all control parameters for valuation as shown in this figure. Various tabs and control features of the preliminary costing variant can be maintained for a product cost collector. The This costing variant will determine the cost estimate calculation when the product cost collector is created and saved. This process looks similar to the costing variants we introduced in the previous video, but with one major difference: the costing type. As shown in this figure, no update is selected for price update, and the indicator for preliminary costing for production cost collectors must be selected to on the costing type. So let us see in the picture what is this price update and on the costing update. So here it is costing type 19, and when we click on it we can see the product cost collector, price update is no update, and preliminary costing for product cost collectors. This figure shows an example of a simultaneous costing variant for a product cost collector. This variant will be used to determine valuation of actual quantities reported from the shop floor as products are being manufactured. In the product cost controlling by order section, we will review more details about each costing variant. So this figure shows costing variant, simultaneous costing for the product cost collector. So this variant will be used to determine the valuation of actual quantities reported from the shop floor as products are being manufactured. So order type for logistics. The logistics production order master record is created by first selecting an appropriate order type. All control functions of the order type are then transferred to the order being created. The order type is created and maintained in the configuration menu. For an understanding of the process integration between logistics and CO, we will need basic knowledge about this order type. If we see in the figure, it shows an example of an production order type used in this scenario. Any cost related settings are assigned to the product cost collector order type. To trigger the decoupling scenario, one more setting for the production order type is important. In shop floor control configuration, as shown in figure 6.8, the cost collector checkbox must be selected. Once selected at creation, production orders will first search for a valid product cost collector to assign itself to for controlling valuation. If found, the production order status will indicate PCC. If not found, the production order defaults as the cost object. So this 6.7 figure shows order type PP08 production order example. The order category is production order, number range interval, settlement profile, and the object class, functional area. After selecting the controlling level for material, the fields required in the characteristics for production process section will differ. For example, if the controlling level is production version, you must enter a production version number. If the controlling level is BOM or routing, you must maintain the BOM usage field, and so on. Click confirm to continue and the system will display the tabs for maintaining the product cost collector as shown in this figure. So here BOM or routing controlling level for material. We have, after selecting the controlling level for material, the fields required in the characteristics for production process section will differ. So production BOM, production version or BOM or routing, production plant or planning plan. Here they have selected BOM or routing. So the characteristics for production process is differ. So for example, if the controlling level is production version, you must enter a production version number. If the controlling level is BOM or routing, you must maintain the BOM usage field. Click confirm to continue and the system will display the tabs for maintaining the product cost collector as shown in this. So here we can see the fields which are available in product cost collector data tab: profit center, actual cost, planned costs, costing sheet, overhead key, result analysis keys, variance key. So on the product cost collector data tab, the defaults shown in table below will be populated. On the product cost collector data tab, the defaults shown in the table will be populated. Field profit center defaulted from material master, purpose profit center accounting, and planned cost defaulted from order type, and additional cost also defaulted from order type. Costing sheet defaulted from order type. Simultaneous valuation, overhead calculation, and overhead key from material master. Result analysis key from order type. Variance key from material master. So from this we can understand the values which are populated against those fields are defaulted from material master and order type, and the purpose is for overhead calculation, work in process calculation, or there are many different calculations for profit center accounting, plan valuation, variance category calculation. So as these processes are interlinked, if we understand the process better, it is very easy to understand the concept in detail. So now let us review the header tab shown in this figure, product cost collector header tab. So the description and the company code, material, order type, and the order, who created this, and created on date. So the default values shown in this table are displayed. So defaulted from routing, purpose indicates the routing and bill of material. Company code defaulted from plant, and order temporary until saving. So we can understand from where these values are getting defaulted and getting updated in this fields. So it is from routing plant. So finally, let us review the production process tab in this figure. On this final tab, you will see values we previously entered and explained, with one exception: the production process number field. This new field is very important for integration with logistics production orders. As we entered details into characteristics for production process section shown earlier in the figure, the system was assigning this unique production process number to identify this unique combination of controlling level characteristics. We will see in a moment how this unique identifier integrates with logistics. So upon saving the product cost collector, a preliminary cost estimate will be created for this cost object and its itemization will be displayed immediately as shown in this figure. You can verify the itemization immediately by seeing. So once we provide all these information, a preliminary cost estimate will be created for this cost object and its itemization will be displayed as we can see in this figure. We can verify the itemization immediately by comparing this information to the preliminary costing variant. So product cost collector itemization after saving the header tab will be updated with the following information. The product cost collector order number links to any logistics orders, the cost estimate of the production cost collector, the settlement rule defaulted from the order type RM01. So logistics production order for controlling by period. Create production order. The mass creation of production orders is generally determined by demand requirements for the materials. This task is usually executed through the logistic MRP processes, not by a CO process. Production order master records can be created in several ways using SAP S/4HANA GUI transaction CO01 to create a production order, using the SAP S/4HANA GUI transaction CO01 to create a production order, using the SAP Fiori Launchpad app create production order. Regardless of which method you use, as shown in the figure, we will need to maintain the following fields: material number, production plant, and the order type. So production order status indicator is PPC. Warning: we can see be sure to enter the logistics order type that has been configured as decoupled, otherwise the link to the product cost collector will not be found. To enter the logistic order type that has been configured as otherwise the link to the product cost collector will not be found. After any logistics required fields have been entered, the system will indicate that a product cost collector has been found for this controlling level by displaying the status PCC in the order as shown in this figure. After any logistics required fields have been entered, the system will indicate that a product cost collector has been found for this controlling level by displaying the status PCC in the order. So to see additional details related to the product cost collector, navigate to the control tab of the production order as shown in this figure. We can see the actual costing variant, plan costing variant, costing sheet, overhead key, and the production process. So transfer to product cost collector. In the costing group of the control tab, costing variants and other costing related defaults may exist. However, these variants are not valid because this production order is not a cost object. Double click the product cost collector button. Product cost. Double click the product cost collector button to transfer to the cost object. So in the costing group of the control tab, costing variants and other costing related defaults may exist. However, these variants are not valid because this production order is not a cost object. Double click the product cost collector button to transfer the cost object to the production cost collector as shown in the figure. Note that production process number is same on both the objects. In this case 5619. Return to the production order and complete the process by releasing and saving the order. An order number will be assigned based on the number range assigned to the order type PP08. So the note, the product cost collector and the production order will not have the same number assignment. Each order type has its own unique number range. The product cost collector and the production order. This is product cost collector. Simultaneous costing for controlling by period. As logistics shop floor reporting progresses, the quantities of materials and labor are reported to the production order. Valuation of these quantities are posted to the product cost collector based on the simultaneous costing variant. The design and purpose of this variant is the same as found in the CO by order, and we will review its settings in the product cost controlling by order section. As a product is being made, a small note here, as a product is being made, logistic reports to the production order, not to the product cost collector. You can analyze both orders using the following transactions: production order transaction COO3 and transaction COOIS, product cost collector transaction KKBC and PKO. On the product cost collector, all values flow through the profit and loss statement according to the account determination of the materials and the activity types. More details on simultaneous costings will be covered in the product cost controlling by order section of this chapter. Final costing for controlling by period. At period and close, the steps for final costing are executed. At period and close, the final steps for final costing are executed, which may include all or some of the following steps: template allocation if cost objects are senders of overhead via templates; revaluation at actual prices, cost center activity prices are recalculated at actual and their consumption is revalued; overhead if cost objects are senders of overhead via costing sheets; work in process if a legal requirement exists to capitalize unfinished inventory; variances if reporting requirements exist for analysis by category; settlement to post the result of work in process and variance to FI. More details on final costing will be covered in the product cost controlling by order section. However, an important topic to discuss is to how work in process is calculated for the product cost collector. Work in process is calculated using a target cost method for the product cost collector. Let us take a closer look at what this means. So, final costing for controlling by period. So in this slide we will see the how valuation variant for work in process and scrap works. Product cost collectors can calculate both variances and work in process in the same accounting period. This feature of the product cost collector cost object is unique and several settings make this capability possible. The default rule of the product cost collector order type We reviewed this setting in the previous figure. For a product cost collector, this rule must be set as STR, periodic settlement. In configuration, you must complete the define valuation method, target costs and transaction OKZD. In configuration, you must complete the define valuation variant for work in process and scrap target costs transaction. An example of the defined valuation variant is shown in this figure. In these settings, you will indicate which cost estimates will be assigned and assign a priority to each. In our example, the first priority is to use the product cost collector plan cost. If this value is not available, the second priority is to use the current standard cost estimate. In this, here we have a tip. The priority you assign in this step may depend on your accounting policy. You may require the standard cost estimate to be the basis for work in process depending on your country. When work in process is calculated for a product cost collector, the system determines the unfinished quantities at each operation based on the quantity reported as complete, then evaluates those quantities based on the incremental cost estimate defined in the valuation variant. When work in process is calculated for a product cost collector, the system determines the unfinished quantities at each operation based on the quantity reported as complete. Shop floor reporting, operation 10 and 20, withdraw raw material from warehouse 100, quantity remaining 25. We have used the material 75. Now we have only used 75 and it is 50. Quantity received as finished is 25. Target cost estimate per piece. Operation 10, material $100, labor $20. So in the previous figure, we have seen a simple example of the calculation. Quantities have been reported for 2 operations and as finished goods. The system can calculate how much material is left unfinished at each operation. For example, if 100 pieces of raw materials were issued and 75 pieces were complete through grinding, 25 pieces must remain at the end of the first operation. The target cost estimate exists with incremental costs by operation. In this example, these costs are broken down by material, labor and overhead costs. The system can calculate WIP as the value of the unfinished quantity left at each operation. Operation 10 equal to 25 pieces into target cost at operation is $2,500, 500 labor and 250 overhead. And operation 20, 50 pieces and target operation at operation 20 is $0 and 1,500 labor and 750 overhead. SAP S4 HANA calculates the WIP and variance of a product cost collector using the following steps. Calculate WIP at a target as shown in figure. Calculate the variance according to the following formula. Variance equal to product cost collector order debits minus goods receipts minus work in progress at target. In the product cost controlling by order section, you will see how order WIP is calculated and get an overview of the configuration settings. In closing, let us review the costing phases and value flow for period controlling as shown in the figure. Costing phases and value flow. Preliminary costing, ordinary type preliminary costing variant multiplied by product cost controller quantity structure, plan value of product cost controller. So simultaneous costing, debit quantity goods issue into price control, labor confirmation into simultaneous costing variant. Credit is quantity goods receipt into price control. Actual order balance, periodic costs, final costing. Okay. Product cost controlling by order. This scenario is most often deployed in a discrete manufacturing environment. In discrete manufacturing, each product is manufactured individually. Each product is manufactured individually defined lots. Example include any lot based production. Um, you may be familiar with the phrase process manufacturing. For our purposes, this kind of manufacturing falls under controlling by order. Production or process orders are created and released to the shop floor to produce specific quantities of semi-finished and finished goods. These logistic orders are the CO cost objects. All quantities are evaluated on the logistics order. SAP S/4HANA offers several standard order types for this scenario, including order type PIO1 and order type YBM2 category 5 for process orders, and order type PPO1 and order type YBM1 category 10 for production orders. Each order type is created within a specific category that determines what master data is required. If you create an order with order type PI01, the system will search for master recipe. If you create an order with order type PPO1, the system will search for BOM and routing. In this section, we will walk through the key components you will need to configure for cost object controlling by order. Order type for controlling by order. Order type production order category 10. A production order is created by first selecting an appropriate order type. All control functions of the order type are then transferred to the production order being created. The order type is created and maintained in the configuration menu. The order type for CO is a client level object created as production order. As shown in this figure, all control parameters are contained in the order type, including the number range interval controls the numbers assigned to the order master record at creation. This range can be internal or external. Settlement profile, commitment management. The profile mentioned earlier are created independent of the order type and can be assigned to many other order types. We will review various profiles later in this chapter. Order type YBM1 for production order. So in this we will see plant level default values for order cost, transaction OKZ3. So cost accounting relevant defaults for controlling by order, as order types are defined at the SAP S/4HANA client level. SAP S/4HANA provides an additional level of detail for cost accounting default values to the order. As shown in this figure, these defaults are assigned at the plant level. Notice that compared to the same setting for controlling by period shown in this figure, only a few additional indicators are required. As shown in the figure, each plant defines its own rules for costing by order type, including the following. Default rule PP1 determines how the settlement distribution rule is structured. The default rules are predefined by SAP S/4HANA and cannot be changed. For orders, this rule must be PP1 full settlement RA key. The result analysis key controls the WIP process at period end, and production order plan. The preliminary costing variant controls the planned valuation of the production order. The simultaneous costing variant controls the actual valuation of the production order, determines when the planned value of the order is created. This indicator did not exist for controlling by period. Product cost collect. Do not select this checkbox for controlling by order. All default values will transfer to the order at creation. So costing variant for controlling by order. The costing variant contains all control parameters for valuation. In this figure shows the various tabs and control features of a preliminary costing variant for an order. This variant will determine the plan cost estimate when the production order is created and saved, much like the costing variants introduced in chapter 5. Here we have a note. The costing variant does not have quantity structure control parameters like the product cost collector variant did, because the quantity structure will be taken from the BOM and routing assigned to the production order. So in this figure it shows the various tabs and control features of an actual costing variant. This variant will be used to determine the valuation of quantities reported from the shop floor to the production order. This costing variant contains all control parameters for valuation. If we see in this figure the various tabs and control parameters of the preliminary post costing variant for an order. This variant will determine the plan cost estimate when the production order is created and saved, much like costing variants. So the costing variant does not have quantity structure control parameters like the product cost collector variant did, because the quantity structure will be taken from the BOM and routing assigned to the production order. So in this figure we can see the various tabs and control parameters of an actual costing variant for an order. This variant will be used to determine the valuation of quantities reported from the shop floor to the production floor. So with this I will end this video, because it should not be a long video which we cannot focus on understanding the concept. So I will continue the series in the next part of this video. I will continue the second part of cost object controlling in the next video. Thank you all. Thank you so much for watching my video. Thank you so much.